Hello, Warriors. How's everyone doing? Hello, Alexander, Paul, Hugo. Hope everyone's doing okay. Couple of days before the NFP. Hi, DJ. Angle, nice to meet you. Welcome to Face. Couple of things I want to touch on before I bring in Blake. Also, our guest today at the bottom of the hour is Mark Chandler. Stick around for Mark. We'll see if Mark is making sense today. SENSE. Okay, so I want to start off. Hello, Rick. Sinatra. All right, want to show you the VIX. Yesterday I was talking with Stelios about these kind of ghost ticks and these big wicks being left for throughout the month of June. Okay, and also, if you recall, if you're a regular here on Face, I've been forecasting strength in equities until the end of the month. So here we are at the end of the month. Now we'll see. But as you can see, this downtrend line has been supporting it even at new lows. So I've seen this with wedges before. Anyway, of course, the pivot is still this, 19 level, but I see Blake has an alarm set here at 17. So that could be a big deal here. We have a low weakness in stock indexes today. We did touch 4,300. 4314 were some type of fib extension targets that's still possible. And for the first day in quite a few, NASDAQ is a shade weaker than S&Ps. And I have to admit, I didn't think that this throwover that we had would have this much muscle. Okay, so what's helping it is yields, which is kind of hard to get a handle on because I could see two scenarios. I could see us pulling back here for, 1, 2, 3, or a breakout over, 157 would change it. And, a lot of people are calling this a bull flag. It's pretty stretched out to be a flag. So, possibility rates go down and maybe it's going to be a little risk off. How would you guys like to wake up in the morning and have all of these positions on your book? Blake shorted Bitcoin up 3.7%. Blake short Aussie making money. Greg making money on the long side of Swiss. As you can see, long dollar positions are working. Blake making money long CAD, and Blake making money in Euro Aussie. And he's really had the patience of Job to sit with this. So if you don't have the, and I'm not saying it's always like that where they're all winners, but I do believe that we have one of the best teams on the net as far as analysts and traders, and this could be your account. All you have to do is pony up to the table and become a member, and this is just part of the service. What happens in the chat room and all the private members only webinars are there. So just something for everyone to consider. Nice work, Blake.
And you know what, Dale? That
Shooter.
first of all, you pointed it out that, and it's very true. That they're not always all winners, but I think what the patterns in play actually can do for most traders, because you're not. It doesn't necessarily mean that I'm short Bitcoin. I need to be shorting Bitcoin right now. But what that really will show
give people biases.
Yeah, I'll give you a bias. Like what's my conviction like? Like the Euro Aussie. I'll tell you, I've been running a long Euro Aussie for the last
month.
Me personally, and I'm profitable barely because of my carry costs. because it costs a little bit more to carry that Euro Aussie long, because the euro is a funding currency. So as a result, it's not a very profitable position. But I've been running it, but it doesn't. The point is, you don't necessarily have to run any positions that I put on it, but it also will give you a bias on like what I'm thinking and more of a conviction. If you're like, oh, I'm seeing the Aussie breakdown. Oh, look, Blake's got a Euro Aussie on. That makes me feel good because I know he's seeing Aussie weakness at the same time. That's what, if I was using Forex analytics from an outsider looking in, I definitely would be looking at the patterns in play to help me try to figure out what I want to do with the market.
Hey, look, Blake, you got a message right here from your customer service people here. It says, "I love Forex analytics." Look at that.
Great. Thank you. All right. I appreciate that.
All right. Anyway, you got a fan.
But anyway, so what I want to do this morning, Dale, is I want to talk about the weakness in precious metals here. The precious metals continue to stay really weak, and what you'll notice here on the silver market is yesterday we came down. Let me just show you. First of all, and by the way, we have ADP non-farm coming out in just a few minutes. If you go over to Forex Analytics, this is the bias chart. This is the chart that we do every morning with all of the Forex Analytics subscribers. So we do this in about a little over an hour's time. So it is exclusive for Forex Analytics people. Okay, and remember, you can even be a light member at $19 a month, but you can listen to all of our webinars. And it's just not mine. We have the daily roundup 4 hours from now or 5 hours from now. Then we have the European crossover, which is while I'm sleeping, hosted by Paul Franco. So, we have, different webinars exclusively for our clients. But you notice that I have 25.50 on silver with an asterisk. And that was here as we were approaching, and you can see I actually have an alarm set up. That's a spike low. And what you'll notice out of gold and silver is they're both trying to break lower. And you notice that support, I had to move down on gold to 17.25, but it had been 17.55. I want to say for weeks that we've been looking at this number. We're at least a week and a half that we've had 17.55 written down. And what we did is we pushed below there. And yesterday I was thinking to myself, I told you can go listen to the daily roundup, or not the daily roundup, the Morning Edge webinar because you guys can listen to the recording 24 hours after the fact. But I told everybody, I'm like, look, we probe below that 17.25 level. I wouldn't be surprised if we get a little false breakdown here and we start to bounce in gold. But what's really interesting is when I woke up this morning, I really thought gold would be trading closer to 17.80. And, we're trading really heavy. And I'm really surprised that gold can't get out of its own way. Now, the bearish setup is that we have a pennant, and we're pointing to new trend lows below 1675 here. So it should, based on what we're seeing, press lower. But yesterday's price action, I was like, maybe we're going to get a little bit of a bounce. And man, nothing. And look at the dollar right now. Holy crap. Look at the dollar. It's actually moving. And if you are, I actually thought the dollar would stop here. If you are short dollars, okay, I have to ask this question to you right now. Hold on.
Why?
No, not necessarily. We are seeing COVID-19 surge because Delta variant without required testing. the IMF chief economist is commenting right now, and that's this is really becoming a worry. The Delta variant.
Yeah.
We are seeing COVID-19 surges because of Delta variant without required testing, PPE, oxygen. Some nations won't survive. Surge. Wow. Wow.
Let's go back in lockdowns.
Fudgesicle that.
Yeah. It's going to be the dominant one here, and 50% of our population is vaccinated. And I was chatting.
That's a pretty bold statement. And you know, I was just talking to. I was trying to think where I was having this conversation. Last night, I was talking to folks from Pepperstone. So we're doing this. High production value show with Chris Weston and myself. We're having a hard time fixing the technical parts about it. But I sat on with two producers, and I was sitting on a WebEx with them late last night, you know, but like an hour before I normally go to sleep. And I'm sitting there and talking to them about COVID. And I was like, yeah, you know, if you live where I live, I mean, 8 months ago, we basically said, you know, screw you, COVID, and we're doing whatever we want to do. And where I live, it really is like the Wild West. I mean, no one cares. I mean, you could walk through a grocery store and not see one person with a mask on where I live, and that right or wrong, but that's just the way it is. And I'm worried for places that are like where I live, where people are very nonchalant about it, because that's where it could really spread like wildfire. And how much of the United States is like that right now, Coach? A lot, right?
Yeah, mainly like, you know, places like Mississippi and states that have very low vaccination rates. They're expecting problems. And the problem is that fully vaccinated people are getting it. As Amanda said, a vaccine isn't a cure, it just gives you some protection. And I don't know if there have been breakthrough deaths, but there are breakthrough cases all over the place in Israel. I think you know.
Yeah, so. and I think that's the, you know, my mother-in-law. Yeah. So my mother-in-law, I'm trying to figure out what she is to me. My mother-in-law, she's a physician, and she, since the beginning, has always told us, like, look, you know, when you get a vaccination, it's not going to prevent you from getting COVID. It's going to, instead of getting the flu, you're going to get a cold. Instead of getting COVID, you're going to get the flu. You know, it's going to weaken the effects of it, but just not, it can stop, it can slow down transmission rate, but it's not going to make you, immune to getting COVID.
You're not
and
bulletproof.
I think a lot of people, what?
You're not bulletproof like a lot of people think.
No, a lot of people do think that, and I live in a kind of a
conservative redneck state.
No, there's just a lot of people that are more retirees. Because of being
Sun
in Arizona.
City.
It's not. It's just
take your sinuses to Arizona.
Yeah, I think we have a lot of people that just retire and like to stay here. And Florida is very similar, but a lot of people. I'm more worried about the older population that just said, I guess
even if they're vaccinated, because it could be complications because they have morbidity problems.
Yeah, and I think that if I was 75 or 80 years old and I just got vaccinated, I'd probably be like, you know what? Screw you. I'm gonna live my life without a mask on and enjoy my life. The last few years I've got. I don't know. That might be my attitude. Anyway,
mind reader.
What we're seeing is the dollar strengthen a little bit. And remember, we do have ADP in like 1 minute. Let's pull up that data. Let me pull up data flash here. What are we looking for? We're looking for
600,000.
Thank you.
Yeah. We also have Canadian GDP in 15 minutes, but that's later on.
Okay, let's pull. Shoot. That's not what I want. Okay.
That's my EKG.
Okay, we have just about 15.
That was Stell's from the doctor.
Now remember, the ADP really takes some of the shine off the data, and if we do see stronger data, it means stronger dollar, weaker stocks. It's a pretty easy equation. The market's anticipating a little bit stronger jobs data. 692.
692.
Okay, that's good.
That's close
So,
enough.
yeah, the dollar will probably, stay steady. I think the market wants bigger numbers than that. Because if you think about like the whisper number for this month's jobs data, it's closer to 1 million. Although the headline number everybody's thinking right now, the headline number is like 700,000, but the market wants to see closer to 1 million. So you can see the dollar is actually weakening a little bit. I think that,
A lot.
what define a
Oh,
lot?
you're on a 1 minute chart.
Yeah, define a lot. The euro just moved up 5 pips. Don't get freaked out. Wait, hold on. Let me take you over to an hourly chart.
Give me some perspective. Okay.
That is a good example, by the way, Dale, of how people that only trade in short-term time frames can really,
get excited.
Get excited or actually get to believe that something major is happening when it isn't. You know what I mean?
Over nothing. Yeah. Get excited over nothing.
Yeah. So and just for those of you that were not on any of the Forex Analytics webinars yesterday, I'm talking the daily roundup and the morning edge. I've been looking at this euro dollar. I know the red lines look like a pennant, which we talked about here, but yesterday I started drawing it more as a wedge, versus a pennant, because we have the jobs report on Friday and we have PMIs coming out. We obviously had ADP just now. So I'm a little skeptical that the euro is going to hit new lows. We would have had to have a really big blowout ADP number today for the euro to be trading down here at 118.50. But I do think that we might spend the next couple of days really consolidating here before moving. I may be wrong. I mean, and one of the things the reason why I wanted to bring it up today is I wanted to bring up gold and silver, because I think gold and silver are on the cusp of breaking down. And if there's one thing that will drag the dollar higher, it's going to be, a weak precious metals. And they still look vulnerable. Now, I want to talk one last thing before I hand it over to Steven Stelios really quick regarding the dollar. It's something that we were just talking about with Dale before I realized that, ADP was coming up really quick. You got to ask yourself, as a dollar bear, and again, this is, I'm long the dollar against a couple of currencies right now, but I'm not aggressive, but I want to be aggressive. Like, I really want to buy dollars aggressively, because you guys have heard me say this. The dollar, I think the market's poor positioned in the dollar. I still think that you look at CFTC data, the dollar's still really shunned. Market's pretty long euros still. They're basically short dollars. And remember, the dollar short trade was the trade of 2021. Just always keep that in the back of your mind this year, okay? That going into 2021, it was the short dollar, euros going to 140. That was the trade. And it's obviously everything opposite has happened since then. So I think the dollar can press higher, but I want some evidence.
Confirmation.
Well, you have to be patient. And you can see that we had the bull flag pattern here, and I'm long some dollar Canadian, short some Aussie dollars, blah, 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 blah. But I really want to press those longs, but I'm not going to do so until, Friday. If we get some really strong data and people start thinking, okay, the Fed may talk about tapering and really start to taper, make an announcement at Jackson Hole this year, that could really push the dollar into breakout.
When is that, in August?
That's end of August, yes.
Yeah, okay.
So mid to end. Wait,
I didn't get my
I want to say
invitation
it's August 20. It's right around my birthday. I want to say it's like August 15th. I can't remember if it's August 15th or August 25th. It's somewhere around there. Anyway, the point being here is that I think that the dollar is at risk of breaking out. And if you are short the dollar, you've got to be feeling the heat right now. You've got to be thinking, hey, the dollar hasn't weakened and stocks are at all-time highs. The NASDAQ and S&P closed at all-time highs yesterday. Like, why isn't the dollar weaker right now? Why isn't the Aussie dollar trading at 79 cents or 80 cents right now? And if you are long or short dollars, and you know if the stock market just has a 5% blip in the matrix, like, you know, we just see a 5% sell-off for whatever reason, you know, the dollar is going to go right up, you know, it's going to go whoop right to new highs, probably against a lot of major currencies. And that's just going to, you know, accelerate and probably reinforce, you know, equity market selling at that point. So again, I happen to be long the little dollars, but I like to put myself in the shoes of somebody who's on the opposite side of my trade. Like, how are they feeling? And when you take that into, you know, into context, it might actually help you in your in holding on to a winning trade. Like, one of the reasons why I can do that is because I'm sitting here going, okay, you know, I'm long the dollar. It's kind of working, but man, if I was short, I sure would be, you know, worried right now. Anyway, just some food for thought. All right, Stelio, Steve, good morning, guys. How are you both?
Good morning, guys.
Good morning, everybody. Good morning, Vietnam.
Morning.
Congratulations on you being completely healthy, Stel.
Thank you. Thank you. It's
I mean,
temporary.
It's all temporary.
Yeah.
It is, yeah.
Right.
So
what's happening? How do you guys feeling about this jobs data that just came out, the ADP data? Any thoughts there?
that was roughly in line. And frankly, though, this number, you know, it's had some outsized prints, higher and lower, but people really care about the payrolls number on Friday. So I'd like to get excited about it, but I can't. Yield still going lower. So the 10-year US is now 145, and I'm going to be a broken record and say that as long as that stays there or thereabouts, equities cannot fall, at least not in a meaningful way. So what do we do until Friday? We're probably going to be shopping sideways, and cryptos are probably going to be the ones that move, right? That's what I think.
Yeah, I mean, and you know, I just want to point out, I know Dale mentioned a little bit earlier in our pattern and play, I put a short Bitcoin on yesterday. Well, you guys got the notification. And actually, we started tweeting about it. The FX Macro, he had mentioned something on Twitter, and I said, hey, you know, we're also at a 618, and he's like, he responded back. He's like, yeah, thanks, Blake, because we just sent out an update on Bitcoin. Where is it here? We just sent out an update on Bitcoin yesterday. Oh, I guess it was in the chat room. Or no, it was right here. Bitcoin installed the 618 retracement, which is also the top of the resistance zone. This is a level for fresh shorts with a good risk reward for shorts back towards the 30,000 level. So that was released, you know, whenever we put in that pattern in play, which, you know, was 19 hours ago, I guess. And then, you know, it slid from there. And I think that's a pretty important resistance now at this, you know, 36,500 level. And you're right. I think the cryptos are moving right now. What are you thinking, Steve?
If I may say one more thing before Steve comes in and doesn't leave me any time to speak. I'm kidding. Jane actually writes very correctly. She says Bitcoin is mainly over leveraged longs, and the longer it goes sideways, the more chance of a liquidation. We have to realize that institutional money is in cryptos now. So it's not the people who believe in it and say, oh, you know, I'm going to hodl forever, and it's the, you know, it's the future, and I have to own Bitcoins and never sell. We have now institutions who are a bit more price sensitive, let's put it that way. So I think Jane is right in saying that if we stay sideways and then kind of break down below 30, I think that's it's going to hurt this time. What do you think, Steve?
Yeah, as I said a week ago, I think Saylor's pressure point at 26,000 is a very, very juicy level for the market to not pressure. So yes. I think we're going there. I don't know if it's going to be tomorrow. I don't know if it's going to be in 3 days from now. I don't know if it's going to be in 2 weeks from now. But I think we're going to see that price being pressured and going below it, at least temporarily.
Got it. Well, hey, Steve, it sounds like you're mobile right now.
Not exactly. I'm completely immobile.
Oh, it sounds like you're. It sounds like that you were. You're on your phone, somewhere else.
I am somewhere else, but not on my phone, on my computer.
Got it. Got it. Hey, so
Getting a souvlaki, yeah, DJ. That's right.
He's having
Nah.
some. I would love to
Yeah,
get.
it's so hot here these days that literally you don't even want to eat. I mean, it ruins your appetite.
You know what? It gets hotter here than most places in the world, and I still don't lose my appetite. There must be something wrong with me. Hey, okay, well, thanks for your thoughts there. So I do want to point out that the S&P is struggling around this 4,300 level. And this is so I tweeted about it yesterday, but we all know that there's 127% extension. Talked about this on the week ahead video. It's the two sell-offs that we've seen since May in the S&P, both 127% extensions being tested. I'm not convinced yet that this is the high for near term, but it is stalling the market right now. And I'm not going to even worry about any downside in equities unless the S&P breaks back below this 4250, 4260 level. But do you guys think we're going higher from here in risk, or does it have more to do with what's happening on Friday? What do you guys think?
I think we grind. I don't think we're going lower before Friday, but I think we just grind sideways, maybe a touch higher. As long as yields stay there, I think we do what we've been doing for the last few days.
I think we're
like
the usual.
next.
Sorry, say again, Blake.
I don't like Stelios's answer. Next.
Yeah, I think that we're in the usual summer environment. We've seen this multiple times in the recent years. We're in the usual summer environment that volatility is low. We are very overbought. There's no question about it. The vast majority of the summer days, I think we're going to get a grind higher, as Stelios mentioned. But the problem is that at current levels, there is really no risk reward in being long. And at some point, a few times during the summer, I think we're going to get people flushed. And I think we're going to get some short-lived, sharp moves to the downside. And, being where we are in levels, I don't think it makes much sense being long, because you can find yourself being long to make on average 0.2% on the day, 0.3% on the day. But if your timing is bad, you can find yourself being 6-7% out of the money within 2 days.
I'm with you, Steve. I'm not saying go long. I'm just saying I think we're going to.
I know. I'm not saying you said something opposite.
So maybe, and one of the other things that I think people need to really think about, and just I'm going to reiterate this, but I want to make sure that everybody's clear on this, is that a strong data points, especially if you take the ISM data coming out, it's the services data tomorrow, or the Friday jobs report. Strong data is going to equal weak equity markets. Equity markets will start to think, here comes employment's bouncing back, the Fed's going to be a little bit more hawkish, blah blah blah. So, if we do get a strong, jobs report, there's a good chance that the equity markets will pull back a little bit and maybe give you some better opportunities to be on the long side in the S&P. Maybe you could get long closer to, 4250, 4260 in the S&P. I think this is a more, a better place to be on the long side of equities than, chasing it higher. What we've noticed, and this is, I guess to you guys' point, is every time you chase the market higher, you chase it higher, it eventually goes higher, but this is, you put yourself susceptible of getting, stopped out if you're, FOMOing it all over the place. You need to buy dips versus, buy dips and sell rallies versus, buying rallies. And then, you end up selling, dips, and that's how you lose money in an upward trending market, right? So
I see we hit one of your fib extensions in the last few candles up there.
oh yeah, this is what we said a little bit earlier. This is the 127% extension of both sell-offs since May.
Okay.
The confluence comes in at 43.05. That's been our upside target for the last week and a half. So we've reached it. I still think that the S&P can actually reach for, 40, well, right up here, the 43.80. If we have a jobs report, like let's say we only create 300,000 jobs, and let's say, I don't know, what else? I mean, let's say average hourly earnings come in maybe at 0.3%, a little weaker than even what the market expects. Shoot, the S&P is going to be ripping in new highs in the next week. We could be very well above 4,300 next week on data like that. And we can't
back in this nice reality that bad data is good for the stock market.
Yeah, I mean, we can't assume that the data is going to be good. I mean, the data is bad, and the dollar is going to get smashed, and stocks are going to go higher. So, oh shoot, I just realized it's time. Mark, it's time for Mark. So, Steve, Stelios, thank you guys for all of your wonderful views as always. And I'll see you guys on the Morning Edge here in a few minutes. Dale, has Mark gotten here yet? Is he?
Yeah, he's here.
He is. Okay, great. You guys know, it's no secret, I'm a huge Mark Chandler fan. So
me
Mark,
too.
Well, yeah.
You guys have his poster on your wall?
I do not have his poster. I had it next to Christy Brinkley, but I took those down back in 1982. And
all right. All right.
Yes.
All right. Well, we're all fans here of Mark. So
really
indeed. Enjoy the interview, Dale.
All right. Thank you, Steve. Good hunting, guys.
And hey, guys, I just want to say, for those of you, sorry, Dale, didn't want to interrupt, but
sorry.
One of the biggest benefits of Dale doing these face webinars, guys, is you hear people like Mark Chandler. Mark, you get little snippets of him on Bloomberg or CNBC, and you hear 2 minutes with Mark, and he says his piece and he's gone. But here you've got him for 30 minutes. So, make sure you soak this time up with Mark. He's really one of the best in the business. He's one of the very few guys on CNBC over the last 25 years that I actually would stop what I'm doing and listen to. He's one of the I can name a handful of people, and he is one of them. All right. So, all right, guys.
All right. Well, I'll grill him.
All right. Do it.
All right. All right.
Thanks,
all right, Blake. Welcome back, Mark.
Thank you. Morning, everybody.
Good morning, Mark. Welcome back to Face. I see your face, and I don't know if you want to use your camera or not, but here.
Yeah, I tried to, but I don't think you're. I wanted to scare everybody, but I don't think it's. I think you got me blocked.
Oh, no kidding. Blocked on the video?
Supposed to stopped it. Yeah.
Huh. All right.
I think the picture's better anyways.
All right. So yeah, I'm live, and you could tell I have my pandemic haircut. Did you want to share your screen to show anything today, Mark?
I don't think so. I think we'll be able to talk through it.
Okay. Well, then I'll pull up a few charts when we're talking about it. So
great.
Why don't we start off with what's on your radar? I mean, there was this big deal of a change in tone from the Fed, and the dollar turned pretty viciously because the market was pretty wrong-footed. I mean, the whole world was bearish a dollar. What are you thinking in here? Why don't we start with Euro, Mark?
Yeah, sure. I was listening to Blake and Stelios speak, and my sense is that here's where I would differ. It seems to me two things I'd point out. First, it seems to me that this year the dollar has changed direction, even on a short-term basis, right around the end of the month, around the jobs data. And that really the second point, and that is the dollar's rally is a month old. So for me, the correction, so remember what happened. The dollar rallies in Q1, comes down again in April and May, and now is rallied again in June. I think that this June bounce is corrective in nature. I think that the dollar still is going to be falling. And I think that this bounce in the euro even though we probably will make a new high here, that the bounce in the euro, or this, excuse me, the drop in the euro, or this bounce in the dollar index is maybe we make one more extreme, one more high, and then I'd be looking to fade it. About a week ago or so, the dollar, when it this low that we're approaching again, it was 3 standard deviations from the 20-day moving average across a number of currencies. And as you know, those Bollinger Bands, 2 standard deviations. So 3 standard deviations, an even more extreme move. So I faded it, and but it's come back here now. And I think that there maybe is scope for one more little push higher, maybe a marginal new high, but this correction is long in the tooth. I have my MACDs and slow stochastics overbought for the dollar. I think the market has moved too dramatically in response to what it thinks is a hawkish Federal Reserve. You know what came out this week is that the Federal Reserve didn't even talk about the dot plot at its meeting.
Yeah.
And why should they? All it is the different Federal Reserve presidents, the governors, who don't get their job necessarily because they're good economists. As you know, Powell's not even an economist by training.
He's
So
a
why do we
lawyer.
take
He handled my DUI here in California. I'm
There you
kidding.
go.
Go ahead.
Yeah, so I'm just thinking that the markets reacted more towards the dot plot than they did to the FOMC statement. And there, I think, what was said earlier, that the market has been expecting the Fed to announce tapering at the Jackson Hole conference at the end of August or the late September FOMC meeting.
You could
That
share
does
your
not mean
camera
that
if
they're
you
gonna be
want
in
now,
tapering.
Mark.
Excuse
Yeah.
me?
You could share your camera now. It's been fixed if you want to.
Okay, great. Yeah, let
No.
me see how you get. Yeah,
Sorry
I'll
to
start the video for
break
what
your
it's worth.
flow. There you are.
There you go. Okay.
Okay, buddy. All right.
Great.
So the people are misinterpreting what the Fed said at the last meeting, Mark. I mean, what a jawbone. I mean, you got $100 break in gold, few dollar break in silver, with them doing nothing.
Yeah, I mean, I think that
What's that
we should
tell you?
expect them. We should expect them to taper for sure. But still, the Federal Reserve seems to me behind the curve, and we're going to get next week is the trade balance as well, and maybe tomorrow we get the trade balance. And I'm thinking that when the U.S. has such large budget deficit, and remember, we had over a 4% deficit before the pandemic struck. Large budget deficit and a large trade deficit. Most of the other major powers, Eurozone, China, Japan, they have budget deficits, but they also have current account surpluses. And so I think that the twin deficit issue requires either higher U.S. interest rates, which we're not really getting, or a weaker dollar, and probably some combination of both. So I hear you that the dollar has, at the end of last year, remember what happened? The dollar sold off hard from the election through the end of the year. That those last 2 months were horrible for the dollar. It bounces back in Q1, comes off in April and May, bounces in June, and I still think that it's just a counter trend move. I'm still looking at a lower dollar. One other thing I'd say about how my views differ, I think, and just to think about what's going to happen going forward, is everybody's talking about this growth accelerating. We're going to get something like double-digit real nominal growth in Q2.
Yeah.
But I think that this is the peak. Growth in Q2 is probably going to be the fastest pace. And a year from now, we're going to be looking at 3% GDP in the rearview mirror. And so I'm looking at the fiscal cliffs, the end of monetary easing. They might not take the foot off the accelerator. It might not tap on the brake, but they'll take the foot off the accelerator.
Let's talk about fiscal cliffs, because I believe, Mark, that we have the debt ceiling coming up again at the end of July. And that could be a real battle with all the checks that have been cut from the federal government for fiscal stimulus. I mean, this would be a great time for the Republicans to make a stand about, spending, and maybe we're not going to raise the debt ceiling. What do you think? You're smiling about it. What do you think?
Yeah. No, I think that it's just political machinations in Washington. They're going to, I mean, the fact of the matter is we've spent the money already. We've already committed to spending the money. So now it's instead of like worrying about the bill after you've eaten your lunch. And so I think you're right, though, that there has been some impact in the market, especially because the Treasury has to reduce their cash position. And as they reduce the cash position, that basically has led to fewer T-bills and also downward pressure on those short-term interest rates. But I'm thinking that the other big thing that we haven't talked about, I haven't heard you guys talk about yet, is oil prices have doubled since the end of October. And the past 3 economic downturns,
Good point.
oil prices have doubled before each one. And so you combine this
interesting.
fiscal cliff, the end of monetary support, the exhaustion of pent-up demand, not right away, but in a few months, by early next year, these things will be behind us. And that's why I think that we're headed for an economic slowdown starting around the middle of next year. So we got another year of the sugar buzz.
Okay, that's interesting. So, yeah, a lot of the support payments will end, although some new ones may start. Politically, you think they're going to get something done on an infrastructure spend here?
Well, I think they're going to get something done. It's a question of, I think, how big it is. And even though $1 trillion sounds big, it's over a decade or 8 to 10 years. And here's the thing, I think that we've really put the US economy on a diet. The infrastructure is not world class. And I know that the Biden administration is talking about build it back better, and how the America is back is really predicated on having to compete with China. But I think being citizens of the largest economy in the world, one of the richest countries, we deserve, just for ourselves, even if China didn't exist, we deserve a better infrastructure than we have. And so I support these ideas. I think that they're long overdue. And that's the reason why it's got to be so big, is because we've neglected it for so long.
Right. Okay. So hopefully they get something done. You know, I'm worried about the grid because, you know, I live in a place where it gets to above 100 during the day. So, you know, any kind of energy outage, and I'm freaking out if that happens. So I also want to ask you about what you think, you know, Lagarde, we had the ECB last month, and you gleaning anything from Lagarde about what's happening in Europe that supports your positive view on the euro?
Well, yeah, it's interesting. I mean, so Lagarde and the ECB, they basically made that this July meeting they're going to have in a few weeks is a non-event. The big meeting will be in September when they get to review again their stepped up bond buying. But you know what's happened? Since they increased their bond buying in March, the euro had actually strengthened, and yields have actually risen in Europe despite the added bond buying. I don't think it's a major deal, but here's what I'm looking at. So imagine that the Federal Reserve announces in August or September that's going to taper beginning later this year, right? They've told us that they will give us a heads up before they do it. So if they announce in September, maybe it's going to be for the December. The ECB's emergency bond buying program called PEP, P-E-P-P, that's theoretically, I mean, it's scheduled to end at the end of March. And so it's possible that the ECB's emergency bond buying program stops before the Federal Reserve completes its tapering. And so I think that I still think that we're in a world in which the Federal Reserve wants to lag. It does not want to be the first, whether it's in the central bank digital currency, whether it's in monetary tightening. The Federal Reserve does not want to be on the front of the queue. And it's possible that the ECB sneaks a bit ahead of us in terms of its emergency bond buying.
Okay, so you think yields are stuck in this range on the 10-year mark, trading about
Yeah, that's really
148?
surprised me.
I'm having a hard time forecasting it. You know, at times I think we're going to head up and take out new highs in yields, and then I could also make a case for 130, 120. I'm wondering if you have any clarity there.
I wish I did. All the smart people I talk to keep telling me yields are going to go up, and they tell me that the yields are down because the Federal Reserve is buying. I don't know. It just seems to me, we're still in a world in which if you're to save money, to give your money to one of the most cautious central banks in the world, the Swiss National Bank or the German Bundesbank, they charge you 20 basis points or 25 basis points to take your money. And we still live in a world, I think, in which it's still more characterized by a surplus of savings searching for a home. And I think partly that's what crypto means too. I mean, I think crypto comes about at a time when we have incredible surplus of capital, very low interest rates. And I think that's the real challenge. You know, it's not just the middle class that's having difficulty reproducing itself, but so is capital, low negative real rates. And we've got about $13 trillion of negative yielding bonds in the world still. $13 trillion.
Yeah, that's a lot. You know, that you brought up crypto. So a lot of these central banks are, I don't know, in the white paper stage or even further along of considering digital currency. Like China wants to have a digital yuan. They're talking about, you know, perhaps a digital dollar. Do you think that there's going to be any moves in that direction over the next, say, 6 months, 12 months that any of these countries? I would think that China banning crypto might be the first to introduce a digital yuan. Have you looked into that?
Yeah, sure. This is one of the big issues. And I kind of think this is, when I think about the crypto space, I think there's two coming challenges. One is, as you mentioned, the Chinese have banned the crypto.
Yeah.
But this is not new. This is just really enforcing something that they decided a couple of years ago. But I fully agree with you that this is about command and control functions in China competing with Alipay and these other platforms. And so I do think that China is going to have a digital currency. And I think that the Olympics next year might be a big launch for them. On the other hand, the other issue I think is U.S. regulation is coming. And I know a lot of my friends in the crypto space won't like it, but the problem is that, you know, one of the biggest growing areas of the U.S. Treasury has been the anti-money laundering, anti-terrorist financing. And it seems clear that the crypto space has not enforced those rules as much as, say, regular banks or regular platforms. And that's going to be a problem going forward. And so I think those are the two challenges. But I do agree that, you know, there's something important that the crypto has contributed to our understanding of finance and to the sort of fintech evolution. And that is the security and instant settlement that's possible in crypto. The central banks want that. They want it for themselves. We as citizens want that. I mean, you think about how long the cost, even on MasterCard, even though they can process a lot of transactions, it still is expensive and time consuming. And I can imagine the benefits of a digital currency. But remember that the world that we live in, Dale, is already highly digitalized. Most of the trade,
we already have a digital dollar. I mean, try and pull 5K out of your checking account and they'll raise their eyebrows. Well, sir, you know, we don't have that much cash on hand. You have to order it. You have to order it, Mark.
Yeah, so exactly. So I think that, like, even most of the trade, you know, one of the reasons we follow SWIFT, the international platform for transactions, is that this is a lot of the trade in goods and services is picked up over SWIFT, and at the end of the day, it's digitalized. ACH, how we get our direct deposits from our paychecks or how we make transfers. ACH, also highly digitalized process. So I think in the U.S., we're already very advanced. But of course, what we saw in El Salvador, 70% of the people are not banked or have credit cards. So it makes sense that in places that don't have strong financial systems, crypto tries to fill in that vacuum. My own guess, though, is that crypto is still way too volatile to be used effectively as a means of transactions.
Yeah, I mean, if you went into a grocery store, what you thought you were going to spend could be a lot less or a lot more in Bitcoin by the time you get to the register.
Well, what they do in El Salvador, if I understand it right, everything is still priced in US dollars. Right. And you could just you could just pay that dollar price with crypto, Bitcoins, if you wanted to.
Right.
I don't know. I'm suspicious of this still. I think that just like very few people, I think, would challenge the state, the sovereign's authority to impose justice. And they have a monopoly. And I think that they really do have a monopoly on the power of coinage, probably for good reason. I know a lot of my friends talk about this decentralized finance, and it's very fascinating. But my understanding of American history is that the Federal Reserve came out of trying to solve the problems of decentralized finance. Imagine what it was like in the 19th century in the US, where each of the states would have their own state bills. They would be traded at a discount.
That's right.
50 different state or whatever number of states having their own bills. and being trading these. So the Federal Reserve grows out of the weaknesses of decentralized finance. And I think that a lot of my friends have now forgotten about why we have centralized finance. And even there, when I looked at the ownership of Bitcoins, it's still by IP addresses. It still seems highly concentrated to me. Something like over a third of the IP addresses that have Bitcoin have more than 1,000 Bitcoins.
Yeah.
1,000 Bitcoins. So it's such an incredible concentration. And I wonder if, given the highly concentration of power and wealth and income in the United States, how something that can emerge within that is not going to reflect those same divergences and same concentration of wealth and income.
Interesting. And speaking about vacuums, it looks like you had made a move to fill a vacuum with your world currency index. It's something that you've put together. I want you to spend a few minutes talking about it. And I have your website up here. So I remember reading about it on Twitter, seeing some of your tweets. So why don't you tell our viewers what your goal is and what you're accomplishing with this?
Yeah, sure. I'm old enough to remember when the dollar index was launched. I was working at Dean Witter that was owned by Sears at the time.
Yeah, you could buy a washing machine and
we used
trade.
to say stocks and socks.
Yeah.
And I helped market the dollar index when it was first launched. I like it. It was partly because it's a basket. It trends better. And so a lot of my trend following tools, like a simple one that I worked at the time was a 5 and 20-day moving average crossover system, was the best in the dollar index for many years. But in the last 25 years, 30 years, different things have happened, and the dollar index no longer reflects the U.S. economy or world trade. For example, China and Mexico, 2 of our 3 biggest trading partners, aren't even in the dollar index. And so I try to think about what we want. What do we want to have representative of a currency basket? And what I did was created a GDP weighted basket. And this GDP weighted basket, I worked with Bloomberg, so it's available on Bloomberg. And I am talking to some shops about trying to come up with an ETF based on it. But it's a 12 countries weighted by GDP. The dollar is alone is about 30%. The euro and the Chinese RMB each are about 20%. But out of those top 12 countries, 6 of them are emerging markets. And which is kind of interesting because India, despite this horrible pandemic, dealing with it, that India is going to move into like 5th place in the world economies, whether it was last year or this year, it's coming. And so the basket then is half major countries and half emerging market countries. And it's interesting. I find it more representative, lower volatility, but more representative if you were coming in from Mars or the moon, perhaps, and you wanted to see what's the basket that's representative of the world economy. A GDP weighted measure where the dollar is about 40%, the Eurozone and China roughly the same size as each other, and then breaks down quickly from there, where Japan might be only about 7% or so. So it's an interesting product. I think it's an interesting way to begin thinking about the world in a different way than these trade-weighted indexes, which are like the dollar index, which is really too old and not representative anymore. So I suspect that for those of you who are thinking about ETFs and what the market needs to fill in vacuums, here's my bid for a world currency index. Anybody have ideas about an ETF or maybe a futures contract, definitely reach out to me.
Yeah, you're front running the IMF because I believe that when people talk about the Great Reset or whatever it is, that they were going to value currencies based on GDP and debt. They had some type of formula, but Mark, you beat them to the punch. You brought up the moon, and I know you're a thinking person, and I know this is not, I didn't plan on asking this, but I know you're thinking about this. Why in the media now are all these stories about UFOs coming out and that they're real and that the government is releasing their own stuff that they've buried for all these years? You ever think about that? I know it's an interview about FX, but I know you're a thinking man, and it is a change from, it's just a weather balloon and all of that. For what reason is the media giving legitimacy in that UFOs are real now?
It's amazing, isn't it?
I'm just wondering why. Have you thought about why they might be doing that?
Yeah, I don't know.
We get our
I don't really
next
have a
Fed
good.
chairman walks out of a spaceship, or what do you think, Mark?
Yeah, I don't have a good reason why, but I think it's partly representative of our spirit of the age, greater transparency, greater focus, and a greater accountability. And I think
Okay.
that with modern cameras, it's hard to fool so many people all the time. And so
Yeah.
I'm not a big proponent of this, but I do think that what it really raises in my mind is just and keeps us, I think, as traders, humble about the information set we have, how incomplete it is. You know, this takes us from outer space to something close to home. That there was something they found in Siberia that was frozen for 20,000 years, came back to life, reproduced asexually just by itself. A tough break, huh? But it's just amazing to me that we don't leave aside the economy and the macro and the way unemployment affects interest rates and how the market's positioned. We as humans are still we're just beginning to explore the world around us, and it's shocking how incredible, wondrous it is.
Well, I want people, all your fans probably know, but for people who don't know, this is how you can keep tabs on what Mark is thinking and be able to work with him. And you just go to his website, marktomarket.com, right?
Yeah.
And
So
go ahead.
yeah, I've spent my career helping working with large institutions, large asset managers, large corporations. And it's been intellectually challenging. But I began thinking that I became part of the problem. And part of that problem is that I'll give you the example that, we're all familiar with wholesale and retail. We buy something, we know we're paying retail. And yet we somehow think that money is not part of that deal. But money, there's a wholesale and retail part of the market, the money market. I'll give you an example. These large corporations and large asset managers that I've worked with, they don't pay. When you look at your screen for the euro now, it goes out four places after the decimal point. There's really a fifth place after the decimal point. That is what the large corporations, large asset managers are paying. 1/1000th of a penny spread between the bid and the offer. Now, when I say I'm part of the problem, is I realized, and this is why I joined Bannockburn, I realized that small and medium-sized businesses in America, which are really the bulk of employers, they're the backbone of the country, and yet they are often treated like tourists in the foreign exchange market, paying sometimes 3 and 4% spread. Yeah. And so I joined Bannockburn partly to repent from my earlier sins and helping the rich become richer, and now working with a lot of small and medium-sized businesses, trying to secure for them the institutional efficiencies, transparencies that are available.
You humanitarian, Mark. And all your sins are absolved from being part of the retail, paying a lot for prices. Mark, it's always enlightening to be with you and to talk to you. And I bet you didn't expect a question about UFOs today. And really some great explanations. Do you think that the stock market, I want to wrap it with it, we've been risk on for eternity. Is this going to continue, or is there anything that you can see in the background beside, maybe the slowdown you're thinking about sometime next year that could interrupt this prolific bull market?
Yeah, that's a question I've been wrestling with myself. I thought for my personal account, I did very well last year, but I'm struggling this year. I'm just a little bit better than flat in the stock market, even though the S&Ps are up something like, what are we up, like 14% or so for the year. So I'm struggling here. I'm not sure. I mean, on one hand, I think that share buybacks, pay out to investors and dividends, mergers and acquisitions, low interest rates, even if the Fed begins tightening, like some of the Fed officials think next year. And by the way, the market right now, looking at the December 22 Eurodollar futures contract, I see the market's priced in one hike fully, and about 60% chance of a second hike next year, which seems quite aggressive, given that there's only about 7 of the Federal Reserve who see a hike next year. But in any event, I'm concerned that these kind of technical factors, more than organic earnings growth, is behind the stock market's rise. And so what I'm looking for, like a lot of people, I'm looking for at that, say the Russell 1000 value against the Russell 1000 growth. And it's still moving, and it's still growth is still outperforming. And so I think that maybe we get some kind of rotation as the economic cycle changes. But with such low interest rates, it's hard to imagine a sustained decline in the stock market.
Okay, the Russell 2000 IWM. Let me just show it here, Mark, with everything that, and then we'll wrap it with everything that's been going on with successive new highs after new highs in almost every other index. If you look at the chart I have here, the Russell 2000 made its highs in March and has made a few attempts to take it out, and it looks like an accident waiting to happen. You had, you know, a month to buy a test of the breakout. Heck, they even let you buy it underneath the breakout. What a nice guy that Mr. Market is, right, Mark? And then here you could buy it here again at the breakout. So there's this looks like a massive distribution pattern to me, and I'm wondering, you know, why is Russell struggling with since the spring with everything else doing so well? Do you have an answer?
Yeah, no, it's quite fascinating, and that's why I think that after such a strong rise here in the first half, like I say, I missed the bulk of it. That would it be so bad if we go sideways and still lock in the year for a double-digit gain?
Yeah,
I don't think that's so bad if it's a consolidation, which means that it's like you're stock picking and you're disciplined. And that's one of the things that, you know, I often hear you talking about, Dale, which I have a lot of respect for. And that is that the difference between the people who can take money out of the market regularly and people who can't, it's really a question of discipline, honoring your stops, having a strategy. It's not, I mean, it might sound like a game and it might be fun sometimes, but there's really a discipline involved.
okay, so yeah, it is serious. Serious business when you're a speculator. It's not going to, you know, casino to have some fun. So I appreciate you being here again with us, Mark. Great conversation. I encourage people to follow Mark's writings. I don't have to because his reputation precedes anything I say, and I hope that a lot of things work out that you're doing for the rest of the year, Mark, and look forward to having you back again. As usual, you're my trading warrior brother, and I'm rooting for you at all times.
Thank you very much, and good luck to everybody.
Yeah, let everyone have good luck and good fortune. And besides that, let's not just count our pips. Let's count our blessings. Being able to talk to you, Mark, and bring your views to our community is one that I count. So thank you very much, buddy.
Thank you. Thanks again for all your support.
All right, so that's a wrap, everyone. We'll see everyone tomorrow, the day before the NFP. Good hunting the rest of the day. And like I was just saying, don't just count your pips, count your blessings. Adios, everyone. Have a great trading day. Thanks again, Mark Chandler.